the first 7 figures in the stock market. That's what we are talking about today. Switching up gears, one more upwards. So, of course, I did the whole series about the first 6 figures in the market. But now it's time to talk about the real challenge, right? Because sure, 6 figures, definitely not nothing. But there are, I like this, I think it's Japanese or maybe Chinese proverb. Behind mountains, there are mountains. And of course, what that means is that there is always a next challenge to tackle, right? It would be a little boring if this was the end and we just, lay on the beach and sip the Mai Tai. Sure, it might sound tempting for a moment, but the fun is in the journey, right? So 7 figures now, right? So that's what I'm trying to make it a little bit of a distinction, right? Because different advice, different rules, different nuances apply when we are just starting out, getting our first, 10K, maybe 100K, that's that initial growth, right? And kind of like a little bit brute forcing it, right? And, getting into the right habits. But then, once we climb into the like a 6 figure, multi 6 figure territory, the game changes a little, right? And getting to 7 figures, and frankly, I did not realize before I experienced that, right? But it is different. So I'm Ondrej, for those who don't know me yet. I'm investor in the US market since 2017. I have a little over 2 million net worth at 27. And yeah, it was definitely some time that, it was those 8-9 years of investing. So let's dive into it and let's learn. And let's do it the right way, the hardcore way, right? This is not some fun, not just games. And sure, like the market can be exciting, but there are things that needs to be done. So there are many ways how to make money in the market, and even more how to lose some. And it took me years to understand how tempting some paths can be, and even more that they often lead to dead ends, right? And people, try to and day trade and options and some of these things, but there is a path well traveled. I'm not doing anything new. What I'm telling you here is nothing new. I'm just compiling what worked for me and what I deem to be the most important. I'm just standing on shoulders of giants who mastered the market before me. Warren Buffett, Peter Lynch, Bill Ackman, Howard Marks, Stanley Druckenmiller, too many to name. And that knowledge, both old and new, is crucial. Market transfers wealth from incompetent to competent, from impatient to patient, and from emotional to rational. So we have to make sure that we are on that winning side, because for every trade there are two parties, right? When I was buying Palantir at $7 per share, 2-3 years ago, someone was selling me those shares, right? And we have to remember that, right? So you need to be knowledgeable enough, competent enough to be on the winning side, because the market is not merciful for people who just throw some money into a stock. Usually it doesn't work that way, right? Because if we can't manage 10,000 well, we are not going to get to 100K, right? Some people might just think, I'm just going to throw 1,000 here into this speculative stock here, or I'm just throwing 500 here, or I'm just doing a little bit here. That's just like a rot, like this mindset. We just like, I'm not going to take care of this little portion. Well, if you don't care about that small part, are you going to care about what's important? I don't know. And so what happened over those past couple of years, 2022 was a long, drawn out bear market stretching from January until December. Stocks bled for the entire year with fear, inflation, rising interest rates dominating the headlines. And then came 23, the mirror opposite. It was a recovery year, with stocks grinding higher month after month. But many investors didn't believe it. Sentiment was still in the gutter from the prior year. and a large part of the crowd stayed out, expecting another leg down. The disbelief rally caught people off guard. By the time the general market started noticing, the market had already run far ahead, fueled by falling inflation, resilient earnings, and the AI boom. The S&P climbed to fresh all-time highs by year-end. 2024 started with a shift. After watching market rally without them in 2023, more investors began tiptoeing back in. The mood turned from disbelief to cautious optimism. Trump's election win added a jolt of confidence, with talk of tax cut, deregulation, and business-friendly policies circulating again. There was a sense of potential, even excitement, but it wasn't mania. Many still carried scars from 2022, worry of being caught on the wrong side again. Valuations looked stretched, volatility returned, and the market entered a phase of digestion. A year where you had to be selective. The easy gains were behind us. Complacency was punished. But here's the thing. None of this will matter in 2040. All the noise, the fear, the excitement, the headlines about elections, interest rates, and short-term swings, all will fade into the background. What will matter is that you stayed in the game, that you kept buying, learning, and holding quality assets through every cycle. Because when you're sitting in Cabo in 2040, you'll only see that your portfolio is 10x bigger because you stayed consistent when others wavered. And this is the mindset that we have to train. That resiliency and hard work. Because once again, market transfers wealth from incompetent to competent, from impatient to patient, and from emotional to rational. Drill this into your mind. The stock market remains the greatest multiplier mechanism. Not because the noise, the speculation, or wild short-term moves. It's because over time, ownership in productive cash-generating companies compounds relentlessly. Ownership of productive assets is what creates lasting wealth. By now, you already know which game you're playing. You're not here to gamble or chase every new trend. You're here to allocate meaningful capital and let it work for you through decades, through cycles, through noise, right? So once again, no longer the kind of like the quicker, nimbler, getting your first 10K, 20K, 30K. Now you're getting more methodical. This approach is what I call contemporary long-term investing, rooted in the timeless principles of the greats like Warren Buffett, Peter Lynch, or Nick Sleep, but applied in today's environment. The world is changing fast, but values and principles remain. When I started in 2017, this mindset helped me cross six figures quickly. But more importantly, it's the same mindset that scales to 7, 8, and beyond. Or is it? How the game changes. However, as your portfolio grows, so does the nature of the game. Going from 10K to 100K requires hustle and aggressive action. But once you're working with real capital, multi-6, 7, or 8 figures, the way you operate has to evolve. Your portfolio starts to behave like fixed capital. No matter how much you earn or save, your new contributions barely move the needle. The engine is already running, and your job shifts from fueling the machine to steering it wisely. You're no longer playing small. You're managing serious sums, and that forces you to think and act differently. At this level, you don't bother with breadcrumbs. Small speculative positions that might move the needle for a beginner are meaningless noise for you. The math changes. A 50% return on 5,000 position won't move your portfolio. You don't waste energy chasing what's easy to measure but too small to matter. Capital allocation at scale. What matters now are high conviction asymmetric opportunities. Investments where you can deploy significant capital and allow it to compound at scale. You have to become more selective, more patient. Capital allocation at scale. You need companies that can actually absorb your capital and deliver exponential returns over time. You start thinking like Buffett with Berkshire or Ackman with Pershing Square. Large, concentrated bets on outstanding businesses. Paired with dry powder, ready for when the market serves you an opportunity on a silver platter. And in between, you do nothing. You sit. You wait. You watch. Chasing breadcrumbs is no longer worth your time or attention. That's the real game. And very few have the patience and discipline to play it well. So the path to becoming a better investor doesn't get easier just because you've crossed six figures. If anything, the scales are now higher. You're no longer the young, hungry nobody with barely 10k to your name. You've built something. You have a meaningful capital at work. And with that, the weight of responsibility grows. Every mistake now carries more zeros. Every misstep compounds. The game at this level isn't about hustle or grinding to save an extra 500 to deploy. It's about discipline, clarity, and understanding how to allocate large amounts of capital without tripping over your own ego, emotions, or overconfidence. You don't need to be a genius. You don't need to spend hundreds of hours a month buried in spreadsheets. But you do need to stay sharp. The margin of error shrinks when you're managing serious sums. As a non-professional investor, your time commitment evolves. In the early years, it made sense to spend many hours a week learning, researching, building your portfolio. Today, you don't need to spend that much. Not because it's less important, but because the process should already be in place. The bulk of your time is no longer spent trying to find the next great stock. It's spent watching, waiting, and moving decisively when the market hands you an opportunity worth 7 figures, not $700. You are here to play. You are not here to play. You are here to scale. And at this level, the biggest risk is not lack of knowledge. It's the lack of patience, discipline, and occasional overconfidence that sneaks in when you've already made it further than most. This is the real challenge of managing wealth. Understanding that now every decision echoes longer and costs more. So yeah, as you can see, this is going to be the big topic of this, and I'm again going to cut it in multiple videos. I think it's a little too heavy to be in a one large chunk, but this is the big topic, right? The change when we are moving from that nimble, growth-oriented, putting money into the market, trying to, throw it in, now into that more professional, managerial, but still opportunist, and still of course growth oriented, right? But we have to play the game differently and win. Appreciate you.